In today's video, I will illustrate to you one of the situations that can happen in relation to the counterpoint between buyers and sellers in a price chart. Price bars or candlesticks are usually seen as mere data points on a Cartesian graph, but we can extract meaning out of them if we think under a certain structure. This structure is the counterpoint between market players, which is somewhat mediated by the theory of reflexivity, meaning that markets affect traders' perceptions, and traders' perceptions affect the market in a never-ending loop. That's kind of obvious, but it's not self-evident. In number 1, we have what I would call a solid major low that was attributed this quality when number 2 surpassed the high that precedes number 1. The logical interpretation of this is quite simple. When buyers are capable of advancing their last effort to bring the market up, it means they still have some power. That's roughly where the notion of strength comes from. When a market player is capable of advancing their last efforts, it means that the current market movements tend to continue. That's an objective definition, but it's not an analysis on itself because we have the sellers to worry about, and the buyer's energy won't last forever. The point of trying to analyze the counterpoint between buyers and sellers is to observe how the trend shifts from the hand of one market player to the other, and perhaps most importantly, to identify the exact moments where that happens. Between number 3 and number 4, buyers make another attempt to raise the market. But as we can clearly see in here, the attempt is frustrated because they are only able to create what the industry understands as a double top. The basic interpretation is that there is some sort of barrier in there that is stopping buyers from advancing to the upside. This might be the combination of two things. It can be the active work of sellers. It can be a point where buyers are exhausting their energy, or a combination of both. Number 4 is interesting on itself, but what happens in number 5 is even more interesting, and it begins to form a narrative of what's really happening in this market. Number 5 represents different facts on this chart. In the first moment, we can see that number 5 renders high number 4 as a solid high, because 5 closed lower than 3. Meaning that the sellers that created the market vector from 4 to 5 have some power to create impact in this market, or at least get into a meaningful fight with the buyers. Does that mean the trend shifted to the downside? Not yet, because buyers haven't been disproven. This leads me to the second thing about number 5, which is the fact that it landed exactly at the supply zone that comes out of number 1. In other words, the significant sellers that came from number 4, which are the same sellers that created a barrier for the buyers in 2 and 4, are exactly in the level where buyers should be strong, which is a confirmed supply zone. Watching who wins here can determine the future of the market for obvious reasons. Between number 5 and number 6, we can see that buyers are able to create a bump to the upside, but this bump fails to break any significant level, meaning that buyers showed up, but they were not strong enough to break number 4, which would be a final confirmation of their strength. From number 6 to number 8, we have the confirmation that sellers assumed the control of the market because right after the buyers failed to create a new high, sellers were able to break the low number 1, which was the main axis of buyers in this market. From number 7 to number 13, we can see that a minor flow to the downside develops, and it's clearly respecting the black line as a barrier. So we not only have a notion of trend, but we also have a switch in a major support and resistance line. We have a minor flow in similar motion with a major flow, and the only thing left for a trading here is some sort of trigger like a hybrid bar or a dynamic frequency breakout, which is exactly what happens at number 13. Number 13 to number 14 is the optimal short trade in this market, respecting the boundaries of the pitchfork that was grounded on major points of the chart. Hopefully you can see that price bars are not merely random data points on a Cartesian graph, and that we can extract a narrative out of it that makes us confident to make a logical trade with limited risk and a potentially good reward. If you want to understand how to analyze price in this way, and with much more precision and technique, check out my price action trading video course in the link available in the video description. If you want to support the channel, please click the like button, subscribe to the channel, and leave your comment below. Thanks for watching. Take care.